Right now, as the market bleeds, as panic spreads, the truly savvy players aren't running. They're preparing. They're seeing something you might be missing. And by the end of this video, you'll understand exactly what that is, and why crypto just crashed is the phrase that should ignite your resolve, not your fear. What you're experiencing is something as old as markets themselves. It's called a shakeout. Think of it like a storm cleaning the air. It's brutal, it's uncomfortable, but it often paves the way for clear skies and new growth. We've seen it time and again in traditional finance, and in crypto, it's amplified. Today, we're going to pull back the curtain on these market shakeouts. We'll demystify why they happen, who benefits, and most importantly, how you can navigate them not just unscathed, but positioned for explosive gains. We'll break down the specific moves happening with coins like XRP, XLM, and HBAR, which are feeling the heat right now. We'll explain complex financial concepts in plain English, so simple, your 9th grade self would get it. Forget the jargon, we're talking real-world analogies you can grasp. This isn't just about surviving, it's about thriving when others are panicking. So what exactly is a shakeout? Imagine a packed concert. Everyone's excited, pushing forward. Then suddenly, a rumor of a fire breaks out. What happens? Panic. People rush for the exits, tripping over each other, selling their tickets for pennies. But here's the secret, sometimes there's no fire. It was just a false alarm, or perhaps, a staged one, designed to flush out the nervous crowd. In finance, a shakeout is a rapid, often significant price drop designed to scare out what we call weak hands, those investors who bought in on emotion, without a solid plan. They sell in a panic, often at the worst possible time. This sudden selling creates liquidity, basically, available assets for the smart money to buy at a discount. It's painful for those caught off guard, but a golden opportunity for those who understand the game. But here's the unsettling truth. These shakeouts don't happen by accident. There are powerful forces at play, meticulously orchestrating these moments. And once you see how, you'll never look at a crash the same way again. Right now, Bitcoin, the undisputed king of crypto, is experiencing its own pullback. As of today, Bitcoin is hovering around $115,000, down from its recent peak of over $123,000. For new investors, that can feel like a disaster. But for those who've seen a few cycles, this is classic Bitcoin behavior. It's like the mighty oak tree swaying in the wind. Its movement dictates how the smaller saplings around it will fare. When Bitcoin experiences a significant dip, its dominance often rises. Think of it as Bitcoin sucking the air out of the room for a moment. Capital flows back into the perceived safety of BTC, causing many altcoins, those smaller, more volatile cryptocurrencies, to bleed even harder. We're seeing this play out with XRP, which is down roughly 13% this week, and XLM, down nearly 15%. Even HBAR, despite its recent enterprise adoption news, has seen a dip of almost 16% in the last 7 days. But what if I told you that this Bitcoin dominance, this very problem, is setting up the next explosive rally for altcoins? And what if there's a pattern, a hidden signal, that reveals exactly when these altcoins are about to surge? The answer lies in something called Phase 2. The crypto market moves in cycles, much like the seasons. We're currently seeing clear signs that we're transitioning into a critical phase for altcoins. Think of it like this. Phase 1, Bitcoin's reign. Bitcoin takes the lead, breaking new highs, attracting institutional money. This is where most of the market attention is, and altcoins often lag. We've largely been in this phase for a while. Phase 2, Ethereum's ascent. Once Bitcoin consolidates, smart money often rotates into Ethereum. Ethereum is like the robust younger sibling, offering more potential upside than Bitcoin while still having significant stability. We're seeing ETH showing resilience, even green on the daily, while other altcoins bleed. This suggests we are in the early stages of Phase 2. But here's the critical piece of the puzzle. What comes after Ethereum's run? And how do you pinpoint the exact moment when the tidal wave of capital shifts from Ethereum into the broader altcoin market, creating life-changing gains? It's not about guessing. It's about recognizing the signal, a signal that's flashing green right now. It's easy to get caught up in the daily price swings, but zoom out, and you'll see the bigger picture. Powerful macroeconomic forces are quietly, consistently, pushing capital into crypto. We're talking about ETF inflows, massive amounts of institutional money, from giants like BlackRock and Fidelity, pouring into Bitcoin and now even new XRP-linked ETFs. This isn't speculative retail money, this is smart, patient capital. Then there's the M2 money supply. This is the total amount of money floating around in the economy, and it just broke to a new all-time high of $22 trillion. When there's more money printed, the value of each dollar tends to go down. This weakening dollar drives investors to seek out assets that can preserve or even grow their purchasing power. Where do they go? Stocks are at all-time highs, yes, but increasingly, they're looking at crypto as a hedge, a digital gold. So while the current dip feels unsettling, remember the floodgates of institutional and global money are opening. The question isn't if this capital will flow in, but when it will unleash its full force on the altcoin market. And that brings us to the ultimate setup. You might be asking, if all these massive forces are pushing crypto up, why are we seeing this current sell-off? The answer is simple, yet profound: sentiment reset. Think of it like a spring being compressed. The market gets overheated, too many people jump in chasing quick gains, and the underlying sentiment becomes overly bullish. It's unsustainable. This pullback is the market's way of shedding excess baggage. It cleanses the speculative froth. It forces out those weak hands who aren't truly committed. It's healthy. It allows the market to build a stronger foundation, to create demand zones where savvy investors can accumulate assets at a discount. We want to see Bitcoin, XRP, XLM, and HBAR build solid floors around current levels, consolidating before the next leg up. But there's a darker side to this shakeout. A calculated move that targets your deepest financial fears. And if you don't recognize it for what it is, you could lose everything, just before the biggest move of your life. This isn't just about market mechanics, it's about human psychology. The panic you might feel when your portfolio dips 10%, 20%, even 30%. That's exactly what the smart money wants. They thrive on your fear. When you sell at a loss, they're buying, scooping up assets on the cheap. This is the oldest trick in the book: buy low, sell high. But most people do the exact opposite because they let their emotions take over. Remember the saying, don't let your emotions get attached to your investments? It's easier said than done, because money is emotional. But this dip, this sea of red, is a psychological test. Are you a weak hand, or are you a strong hand? The difference determines your financial destiny. We've seen this script play out before. Back in late 2020, leading into 2021, many altcoins were absolutely decimated. XRP was a prime example, battered and bruised. Everyone gave up on them. And then, January 2021 hit. And those same altcoins, including XRP, absolutely exploded. It wasn't luck. It was the result of a massive shakeout. But here's where things get worse for those who fall for the trap. So, how long will this shakeout last? Days? Weeks? Months? The competitor transcript we looked at suggests August might be a little bit boring. But savvy investors are watching a much bigger calendar, tied to something far more influential than daily price action: the Federal Reserve. The Fed cutting interest rates is like hitting the boost button for the economy and, by extension, for risk-on assets like crypto. Cheaper money means more money flowing into investments. Our research indicates a strong likelihood of the Fed cutting rates around September. This isn't just a hunch, it's a historical pattern. And when that happens, the capital that's currently consolidating, that's sitting on the sidelines, will be unleashed. Imagine a giant slingshot being pulled back. The current consolidation, the boring August, is the tension building. The Fed rate cut in September could be the release. But how can you tell which specific crypto assets will be the projectiles that launch highest? It's not just about historical patterns, it's about breaking down the charts. Let's look at the charts, not with fear, but with precision. For XRP, we're looking to build a floor around the $3.40 to $3.65 region. This is a critical demand zone, where previous highs become new support. If we can consolidate here, a strong impulsive move upwards is highly probable. The recent SEC ETF delay might have caused a dip, but remember, XRP has unparalleled regulatory clarity compared to many other altcoins, and we're seeing strong institutional interest with CME Group launching XRP futures in May 2025. This isn't a dead cat bounce, it's a strategic reload. XLM, Stellar Lumens, is in a very similar position. We're watching the demand zone around the high 30-cent to low 40-cent range, specifically around 39 cents. XLM's core utility for cross-border payments and its enterprise partnerships with giants like IBM make it a strong contender for the next bull run. The goal is to hold these support levels, build that floor, and prepare for the next leg up. And then there's HBAR, HBAR hash graph. While it did lose the 24-cent level recently, which was a previous high, it's now testing the 20-cent to 22-cent range. What's crucial for HBAR is maintaining a higher low, meaning we don't want to see it drop much lower than its July 15th wick. With its enterprise-grade adoption, particularly with the recent NVIDIA partnership announced at the Raise Summit 2025, HBAR is positioning itself as a foundational layer for AI and Web3 integration. This current dip, if held, could be a massive accumulation opportunity before its utility truly explodes. The technicals are aligning. The fundamentals are strengthening. But there's one last terrifying moment that will truly test your conviction, a moment that will separate the winners from the losers. And it happens when... I need to be brutally honest with you. This shakeout? It's going to get a little bit worse before it gets better. This isn't hopium, it's a realistic assessment based on historical patterns. The market needs to fully flush out the last vestiges of fear and indecision. It needs to test your conviction, push you to the brink. You might see some headlines that scream Bitcoin to $100,000. Or altcoins dead forever. Don't fall for it. This is the final stage of the shakeout, designed to make you question everything. It's the moment where patience isn't just a virtue, it's your most valuable asset. But what if you could predict this final dip? What if you knew exactly when to buy, and what to buy, to maximize your returns? There's a simple strategy, often overlooked, that can turn this fear into your financial advantage. For many new investors, the best strategy during a shakeout is often the hardest: do nothing. Don't panic sell. Don't frantically swap your assets. When you try to time the absolute bottom, you often miss it, or worse, you sell low and buy back higher. Instead, if you're looking to capitalize, here's a crucial tip: have stablecoins on the sidelines. Stablecoins are cryptocurrencies designed to hold a stable value, usually pegged to the US dollar. Think of them as your financial lifeboat in stormy seas. When the market dips and others are selling their XRP, XLM, or HBAR in a panic, your stablecoins are sitting there, ready to be deployed to scoop up these assets at a discount. It's like having cash ready at an auction when everyone else is out of bids. This simple, disciplined approach will distinguish you from the masses. But even with stablecoins, there's a final critical piece of the puzzle that determines whether you merely survive the shakeout, or whether you truly conquer it. Remember those altcoin season phases? Bitcoin first, then Ethereum. What comes next, after Ethereum truly gains its footing? Phase 3 and Phase 4, the altcoin explosion. This is when capital, having made its initial gains in Bitcoin and Ethereum, aggressively rotates into promising altcoins. This rotation is the engine of true wealth creation in crypto. And the catalyst for this final massive shift? Beyond the Fed rate cuts, beyond the institutional inflows, it's the perception of stability returning to Bitcoin and Ethereum. As they solidify their new price floors, confidence returns, and investors become comfortable taking on more risk, seeking higher percentage gains in the altcoin market. We're talking about a move so significant, it makes the current dips seem like mere blips on the radar. But how high can these altcoins truly go? And what's the one mistake everyone makes just before the market goes parabolic that you absolutely must avoid? Look at history. Every major shakeout, every period of consolidation, has been followed by an even more significant surge. XRP up 400% plus on the yearly despite recent dips. XLM up 300% plus. HBAR up 250% plus. These numbers aren't random. They represent sustained growth that dwarfs any short-term correction. The biggest trap, the fatal mistake most people make, is chasing the pump. They wait for the market to be at all-time highs, for everyone to be screaming buy, and then they jump in. That's when the smart money is getting ready to take profits. Your goal is to be accumulating now, when fear is high, when the headlines are discouraging. Be greedy when others are fearful, and fearful when others are greedy. It sounds simple, but it takes immense discipline. This isn't just a market correction. This isn't just a dip. This is the market giving you a second chance, a rare opportunity to position yourself for generational wealth. The stage is set. The final act is about to begin. The market is screaming. The news is terrifying. Your friends are panicking. And the phrase echoing in every fearful investor's mind is, "Crypto just crashed." But for you, the savvy few who stayed through this video, that phrase now has a different meaning. When they scream crash, you hear opportunity. When they sell in fear, you buy with conviction. This isn't the end of crypto, it's the purification. It's the moment the weak hands are shaken out, clearing the path for the real sustained growth to begin. The institutional money is flowing. The macro landscape is shifting. XRP, XLM, and HBAR and other fundamentally strong projects are building their foundations. This isn't just about making a quick buck. This is about understanding the cycles, mastering your emotions, and positioning yourself to capture the immense wealth being created in this new digital frontier. The shakeout is almost complete. The final act is about to begin. Don't just watch history unfold, be a part of it. You now possess the knowledge, the clarity, and the perspective that 99% of investors lack. You understand that crypto crashing is often the precursor to its most explosive growth. You are no longer a weak hand, subject to emotional swings. You are a disciplined investor, ready to capitalize. The journey in crypto is never a straight line, but with the right insights, you can navigate the storms and emerge stronger. If you found this breakdown valuable, if it shifted your perspective, then you know there's always more to learn.